What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm going to dig into a new platform that someone mentioned in our Discord. They mentioned it probably about a week ago. And I've spent a little time looking at this, trying to decide if it's like the sort of opportunity um, that I think is appropriate for me to be digging into and helpful for everybody. And so I want to talk a little bit about, what that is. So, there's a lot of different ideas of what fractional real estate is. Um, what I'm really looking for are platforms where I can own a piece of a deal. Um, obviously, have certain economic rights in that deal, whether it be just equity or equity, and rental income. Um, level of control I think doesn't matter so much to me. I think all of them, anything from, where it's a security in the property, sort of like the arrived homes model, or where you're, a co-investor, co-owner, and vote on every decision, like more like Lofty, that whole spectrum I'm okay with. But I really want to have a direct interest in the property itself. Um, I'd like it to be really fractional, where we're buying where it's something that brand new investor can put some money into, right? So I've avoided a lot of the ones where you have to be an accredited investor or that have very large, minimum investment sizes. This one is sort of right on the edge there for that. It requires a $5,000 minimum investment. I think for most of the people watching my channel, that's a little bit on the high end. I think what attracts people to Lofty and Mogul and Ground Floor, which are in Saul's Lot, which are the ones that I've talked about the most and that I've put money into, as well as Collab. Even though I don't talk about it as much, but I have put some money in there. Which reminds me, please like and subscribe. In the description to this video, there are links to all the places I'm currently invested on in fractional real estate investing, uh, or fractional real estate platforms. Please do your own due diligence on those platforms. Just because I invest in them doesn't mean that you should. And the same thing with any properties that you see me talk about. Just because I do or don't buy into them doesn't mean that should be your decision. You should be doing your own due diligence. Hopefully that's abundantly clear when I'm going over all these different due diligence for platforms and properties, right? That's what I think people should be doing, and not just doing whatever, excuse me, somebody on the internet tells them. Um, and then also there's a Discord in that description. Please feel free to join that and jump in with right around 90 other fractional real estate investors that are having discussions just about every day about different platforms, different properties, and whatnot. And so, this platform is a little bit different than others that I've been looking at. It's actually, the setup is closest to fractional.app, which, if you remember, that's a site where they have these little communities, and somebody pitches a deal in the community, and then everybody can invest, and it just so happens it's the same minimum investment of $5,000. They do it in a similar way where they have like a call and you can all talk about it and then decide, do you want to get into it or not. So I thought that was kind of interesting. There's a lot of parallels. I finally stopped and they both have a subscription payment where you pay monthly. I finally stopped my fractional.app subscription this month because I just couldn't find any deals that I got excited about on there. And I think that, I think that's how they are making their money mostly, is that subscription, and then also they charge a fee to put the deals together. But I think they don't really have the right incentives in place to to bring deals to the platform, or to attract deals that make a lot of sense for the investors, right? I mean, as long as a deal gets done, they get a fee there. And even if they don't, they're collecting money from you monthly, right? So I don't know. I stopped my subscription there. This is, that's where the parallels end, I think. So what they're doing, what this platform appears to be, as far as I can understand, is they basically have an investment club, um, where they get together, they look at deals, and they're looking at syndication deals. So they're not buying things directly; they're making investments into syndications. And okay, so my first question is, well, why don't I just invest directly in syndications? Um, and it's something that I've thought about doing. I actually know quite a few syndicators from my commercial real estate days, and fund managers and whatnot. Like, if I just wanted to put money into other people's deals in a large way, It's really easy to do that. But the problem is a lot of them have minimum check sizes of 25,000, 50,000, 100,000. So it's really hard to get diversification. I also don't usually like the level of reporting that you get from a lot of syndication. So that's something that if that's their main model here, I think it's going to be a problem for me. Um, but additionally, what they're doing is so they're saying, okay, we're forming a group, we're looking at these deals. If we like a deal and you want to be in that club, okay, we form this entity, we put the money in, and then we invest into that syndication as if we're just one of the investors in the syndication. Um, so we're basically an additional there's an additional level away from direct ownership in the property. Most of the time, as an LP in a syndication, which is what we would be, is a limited partner, essentially. We have very little, if any, control, maybe none. Uh, there's no secondary market, so we have very little liquidity. When you're sort of stuck in that deal until it sells out, that's not the end of the world for me. So I wanted to dig into this a little bit more and to see, I kind of like the idea, right? Like, okay, let's get into syndications, but let's do it at smaller amounts of money, and so we can spread it around. I don't hate it anyway, except that I'm not a huge fan of investing as an LP in syndications in general. I think a lot of the really good operators, they don't need to attract new money very often. They have their set investors that they're using regularly, and so most of the time when you're getting pitched these deals, they're from people that are on deal 1 through 5, don't have a huge track record, and it's not the best. Now maybe where SparkRental's been around for it looks like since 2016. Maybe they've developed some better relationships. I am going to dig in a little bit into some of the past deals that they've given us info on towards the end of this video, but you know I think that's um, I don't necessarily think that that's going to be a problem for everybody as far as the way syndications work, but I don't really like them in general. But so they have their club meetings, you invest or not, and then they say enjoy cash flow, appreciation tax, tax benefits and whatnot. And they also have a lot of different courses and educational products that they sell on here. They do somewhere along the way mention that they don't actually make any money on you investing in these deals. They make all their money is from the subscription, which I'll get into that fee, and from selling educational material and their calculators and whatnot. So I don't know. I didn't love that. I mean, not that I want them to make money from me investing, but that it's just sort of like it's again like they make money regardless of whether what that deal looks like. And you could have a year subscription, listen to every deal, they're all trash, you decide not to invest, and you're still out that money. I did look up the two founders because I hadn't heard of either of them, and they're in a market. They're both in the greater Philadelphia area, which I had been in for a long time. So I was kind of surprised. I mean, it's not that I know everybody in real estate over there, but a lot of times I'll have an idea, if it's in a market I've been in. Um, so one of the things I like to do is look up their LinkedIn profiles because they might change the profile. A lot of times people will go through say, hey, this is to make it look like they're doing something, but a lot of times people don't go back and actually change their history. So being able to scroll through and see their work history, and this is clearly like not similar times, right? So they didn't sit down and do all these at once. So this was pretty good. Looks like I think it's Denny or I guess Denny. Um, Deny, I don't know. However you say her name, looks like she was in property management. She's been an agent for a long time, so okay, seems like she has more real estate experience than people that have formed a lot of the other platforms that we're talking about. So I was happy to see that, although not like sort of institutional investor type experience, which is what I would really want if I were counting on her advice. But it doesn't sound like necessarily that's what they're doing. They're not in the advice giving business, I don't think. It seems like it's a club and they're talking about, hey, this investment, do you like it or not? G. Bryan, which I always find this a little bit strange when people do that uh, with their name, right? But whatever, that's a personal hang up. It looks like he was in real estate a long time ago, back prior to 2008, And then since that has sold, like, been in the business of selling things to people that are in real estate. He sold forms to them. That he was at this job for a long time. I think this actually goes right up until 20. That's right around when this was formed. Yeah, until the current company was formed. Um, and then and then was a writer for a lot of different places, freelance writer. So, a little bit less direct real estate experience. It looks like, although they do describe that he, has been an investor all along. It is now, I think somewhere they said that he doesn't, he's really just living off of his investment income. But whenever people say that, but then they also have a business, I just never fully believe it, right? And I mean, I guess, I kind of get it. You probably think the same thing about me, right? Like, why am I having a YouTube channel where I've been investing in real estate in real life for 20 years? And, uh, honestly, it's just because I'm still just really hooked on this stuff. And I think this is a neat new world, the fractional stuff. And so, and I want to eventually move money onto it, and I'm digging into it anyway. So why not talk to people about it and form a nice little community where we can hopefully, improve it and whatnot. But anyway, that's a weird aside. Um, so I dug into their co-investing page a little bit. Obviously, one of the things. Oh, and I think this is actually one of the things they did. Uh, yeah, is they compare themselves to, like, or they talked about all the other fractional sites, that are out there. I thought it was interesting. All of these are ones that I've either looked at or thought about. Um, you know, you can see, concrete. They just tell you, like, the pros and cons. It's interesting that he invested in all of them except for, let's see, uh, somewhere. Yeah, Brian invests personally. Not yet, not yet, and that is Connect Invest, which is one of the only ones I hadn't heard of, and then Lofty. Although I think that this one came up in that same discussion that this property did. And so, hasn't invested on the one that I've been the most active on. He doesn't even have Mogul listed on here, which Mogul's relatively new, so I get that. Um, but so, I mean, they're thinking about themselves as fractional real estate. They call themselves fractional real estate. It just, for me, it feels a little different because we're not the entity that controls the real estate. We're investing as a LP. Yes, it is a real estate investment and it's a piece of real estate. It's fractional. But our entity has no the entity that we're a piece of has no control over the deal itself. Um, Bothers me a little bit. I mean, not so much. Like, if you really think about Mogul, Mogul almost behaves like a syndication, um, except that it's the same guys, that are running the platform that are the ones that are picking the deals and everything. So it seems similar. That platform seems somewhat similar to a syndication. Where you have, like, they're acting as the sponsors, right? They're picking the deals out. But we do have a little bit more control and voting rights in that than we would as an LP. Um, They are working on a secondary market, which I don't think would really be possible with this model. Um, I don't know, maybe you could set something up where you buy out your partners or whatnot, but in the investment club. But I don't know. And so this is kind of interesting, though. I think it's worth a read if you have the time to just look at how they describe, like, the different types of um, platforms, and I don't know. I thought this was kind of interesting. It is, some of the info is a little bit dated. Um, but one thing I like is that they are actually trying to, like, educate you on these things. Now, obviously, they're doing it in a way that they're trying to sell you on what they're doing. But it's, just in full disclosure, I didn't take the time to watch every single video on here. It just, pretty, just went through this pretty quickly. Yeah, this is where you get into the actual deal, is like in their investment. They talk about. Oh, I wanted to point this out because this is kind of funny to me. Um, no, where do we go? Okay, so they show you where all the investments. Sorry about that. I froze again. For whatever reason, certain websites just my screen recorder has a real hard time with, and this has this embedded map that it seems to not like at all. But it just shows you the places that they've invested and whatnot. What I thought was really funny is they say 18.08% average targeted annual returns, right? So this is nothing about your actual returns. I just think it's silly when people are like, yeah, if you average the targets of the investments that we've made, it's going to be 18%. Well, that's not impressive, right? Like I could target 100% return deals if I wanted to, and so I don't know. It always drives me crazy when people try to do this, like, little trickery when it comes to how they present stuff. They do actually have a very what looks like very honest actual deals that I'm going to go through in a minute. Um, Here's a couple that they highlight, but I'm gonna go through their list. But this is where the rubber meets the road as far as like what they're doing, right? This is your annual fee, or monthly. And so one of the things I wanted to think about is like, okay, what if I paid this monthly fee and I only found one deal that I invested $5,000 in over there, right? And so, I'm doing this backwards. So I spend $497. I mean, obviously it's about 10%, right, of 5,000, and it's 0.99%, right? Like it cost me basically, half, more than half of the expected return on one deal, to be in this, for a year. And, maybe I'm going to be active and buy into a whole bunch more, or maybe I'm going to put bigger amounts into each one. But like I started saying in the beginning, I don't think that's my average watcher. If you're somebody who's going to put a couple $1,000,000 to work, or even a couple $100,000 to work, you're probably not listening to me. I don't know. Maybe I think a few people are. And I think that's and but I think, yeah, that's where you'd really need to be for me to want to start spending this much money annually, right? I don't think this is like for me where it's going to be like one of several platforms. This is kind of a hurdle. Plus, there's some accounting fee that's like $75 per deal that you're in per year. That's not a huge amount, but that ends up being like 1.5%, of a $5,000 investment, right? But again, maybe you put a lot more to work, and then okay, that's fine. I think in general, because this fee eats up so much of the money, unless you're putting a lot of money to work, this sort of kicks it out of the reach of some of the people that are looking for the $50 fractional investment, the $10 on ground floor, or even 250 on mogul. Like it ends up being, you know I think most of the people that are attracted to fractional real estate investing, most of them are going to be people that don't have enough money for a down payment to go buy their first real estate investment deal themselves. Now, that's not everybody. There are plenty of us that think there are a bunch of other reasons to be invested in fractional real estate. Like for me, I've been experimenting with all these platforms because I think over the next couple of years, I'll probably move a lot of my money that are in real world deals onto some fractional platforms. Once I've really figured out which ones I trust and which ones I think the returns are real and the platform is secure. But that's why I'm doing all this experimenting, right? But I think that that's the minority of the people that are attracted to it right now. I think most are people that are more starting out and are looking, are really like that, small annual, the small, barrier to entry. And so paying this annual fee, or if you pay monthly, it's significantly more. Um, you know, a lot of the people might only be investing 100 or $200 a month, and if that's what you're doing, this is definitely doesn't make any sense. I mean, and obviously this platform wouldn't, because you don't hit that 5,000 minimum. But even if you thought you were going to do it and do one 5,000 deal or a couple a year, it seems like the cost structure makes it hard for me to want to do that. Um, they do have a ton of different courses and calculators and things. Some of it you have to pay for, some of it looks like it's free. So tons of info, and I think that's really the goal, right? Get you part of the club, help you start learning about real estate investing, which I think is all great stuff. Maybe investing alongside them, but maybe just paying and learning and never pulling the trigger. Unfortunately, I think that's the model of a lot of the real estate educators out there. Um, like the more that they can make you not invest in a deal, the longer that you are paying for courses and coaching and education. I don't necessarily think that's what these they're doing, but when you have a model where you're making your money from the subscription and from learning more, um, I don't know. It's not to me that's not exactly what I want from somebody who I'm trying to, invest with, right? So that's sort of my thought about that, but I don't know. I might be turned off from some of the experiences I've had over time. Like, so for a long, long time ago, I was involved in this. It was an investment club. It was something where, um, it was exactly like that, right? Like they were trying to, you paid your monthly membership. They brought deals. They tried to, but every single time they were trying to sell you a new course or a new idea. And then always, the one thing that is uniform among them all is they always try to create like the idea in your head that deals have to be so amazing for you to do them. And if you can't find those deals, well, you're just not doing stuff right. As opposed to just like, okay, let's look at what the market's actually presenting. Let's buy a deal that is the best deal we can find today, right? I mean, so there's a lot of times where there's this sort of there's this perverse incentive on behalf of the people teaching you to keep you a novice and wanting to learn more. But anyway, that's a weird aside. Again, I'm full of those today, and I'm sorry about it. Again, I don't know that that's what's going on here. It certainly doesn't seem like you have to buy their stuff in order to be in the club and be on the calls and potentially investing stuff. Uh, I thought about just signing up for it just so I could be on a few calls, but I don't like investing in syndications, and so I didn't want to go through it and like pretend, right? And so I think that I'm just not going to do that. It doesn't mean that this wouldn't work for somebody else, but I want to just jump into the deals that they're so this is their status of co-investing club investments so far. I'm starting at the bottom because these are their older ones. So okay, pilot deal, invested in a single family flip, made great money. That's pretty nice. Invested in a single family rental, held for 21 months, which is a weird length of time for a rental. Didn't do great, right? I'm not very excited about a 7.1% return. Then they've got these ones. Okay, currently paying distributions 4%, projected return 15.5%. If you've watched my channel for a while, it drives me crazy when you have projected returns that are significantly higher than your current yield. I think it's possible, to make deals like that, but it is oftentimes, it's completely dependent on a big capital event, right? Either a big refinance or a big sale at the end. And so, all we know so far is they've been able to pay a 4% yield. And like, so if I want to have a 15.5% IRR, for me, I'm looking at Mogul. Basically, every deal they're doing there is projecting a 15% IRR. The difference is their current yields are significantly higher. Again, just because I invest over there doesn't mean that you should. You want to do your own due diligence on their platform and on any of the properties that you buy in there, right? They are my current favorite, but it's certainly possible that their deals all fall apart too. Um, yeah, I do have a playlist set up for those videos if you want to check out any of the properties that I've looked at on there so far. This one, sponsor currently prioritizing occupancy over renovations due to high floating interest rates. We don't expect distributions until after a refinance. Still, we're going to get a 17% IRR on that. I mean, this just sounds crazy to me. Um, let's see. The original operator bungled management. I mean, I love that they're this honest, though. Like, this makes me still want to give this platform the benefit of the doubt. Is they're putting these deals out there like, okay, this didn't turn out very good. They're currently trying to stabilize the property, and it's really hard for me to see how they're expecting these high IRRs, though, right? Again, this is another one: low current yield, high projected IRR. Sold this one at a loss. This one seems like it's maybe an investment in a business, but it's doing really well, right? Current yield 13.4, IRR 27%, projected. But I like that. I like that current yield. I have no idea what this deal actually is, but just going through these, let's see. Yeah, after getting hit no distributions at the moment, they plan to resume them in Q2. Again, big IRR. Like, it's hard to understand how you're expecting these big IRRs when your properties aren't performing. Maybe they just bought at such a discount and they're just low cash flow properties. Obviously I haven't dug into the numbers on any of these, but as we've looked at a bunch of properties, you can see like usually if more than half of your IRRs coming from something other than your current yield, either it's like it's going to be a real short-term hold, or if you're doing a flip or something, okay. But I think a lot of the times it's such a speculative investment if that's the case, right? Because it's your whole expected return is dependent on your exit cap rate assumptions, and who knows if you were right when you picked that, right? 3 to 5 to 7 years from now, what maybe you make back, maybe it'll do much better. Maybe cap rates will have gone back down, but maybe they'll expanded more, and so that's why it's really important to me to get some current yield. This one, their mobile home park, this is one you can see this was on their website, as an example deal, and yeah, because it has a very strong current yield, and like this deal looked like a good deal to me, and when I looked at it on there, I can see why it's one that they picked. Again, though, I really appreciate the transparency of showing all the deals. Here's another one. Current yield 3%, renovations underway. Okay, so maybe this one they're. I guess that's one thing, right? Like if they are buying like real deep value add, I can understand why you're going to get a very low yield up front, and then as the property improves, you can get higher. So maybe it's unfair to say like where's that coming from, but uh, you know just when you have the opportunity to buy a 10% in place yield and that also is expecting a similar IRR, it's hard for me to get excited about, putting a bigger chunk of money into a deal, expecting a similar IRR, and getting like virtually no yield, or very low yield in the meantime. This one looked like a good one, right? They had a renovation and a refinance and gave some money back to investors, right? So I mean, they have some good ones. But there's a lot of these that just really made me, yeah, this one they paused distributions. We're trying to build deeper cash reserves. Obviously you can read all these. Um, it's just on this right here. You can see if you want to go through these, I'm not going to go through every single one, but in general, uh, most of the, there's a couple of winners, but overall, these did not seem very impressive from where they stand today. Now, obviously, they haven't been doing it long enough to have a bunch of exits to know. And it is something that, like, just because you join the club doesn't mean you have to buy every deal they do. Like, maybe you could just pick the winners. But if these are, if these are the ones that the club's investing in, it makes me wonder, like, are they getting good info? Like, how are they? Uh, did the deals look much better up front than they turned out to be? Like, what's actually going on? For this number of deals to have as many that mentioned like that they had stopped distributions or that they this or that was going on. They like it is it was surprising to me that to see so many that had a poor result or just or mediocre or just unproven so far. Because they the company's been around for 9 years. I don't know that they've been doing this co-investing thing for that long. They you'll notice they don't actually put dates on any of these, like when they first invested in them. So I don't know. I think that's it'd be hard for me to want to do this. One, because I just don't like the syndication model in general, where you are investing as a limited partner in somebody else's deal. Um, so there are some great syndicators out there. I mean, don't get me wrong. I've worked with a lot of them over the years in different role. I've either when I worked in lending or as a attorney, and lots of different ways where I've worked with them, and there are ones that do a great job. But it is very difficult from the outside to pick those ones that are going to do a great job. The two main problems are, one, you're not going to necessarily get the type of transparency that I'm normally looking for from these fractional sites, right? Like I might not get all the details from the appraisals and inspection reports and all those sorts of things. You're really going to get their offering memorandum and probably, which will have a lot of details, but it will be the details they want to share and probably not a whole lot more than that. And then on the other side, it gets for, it's much more difficult because of the complexity of the of the deal itself, and the inability of of us average investors to be able to find, to verify certain things. So for example, if I'm looking at a single family home on Lofty or Mogul, and okay, if it's an Airbnb, I can look up info on AirDNA. I can on any of the properties, I can look up the value on Zillow or Redfin or any of those. If it's if it's a co-living property, I at least there's a I can check out Pad Split. I can check out Furnish Finder and figure out, are their projections right, or at least I can verify some of that stuff from third parties. Once you get into the commercial space, it's much more difficult to do that. Most of that stuff's not free online. There's a company called CoStar that you can get a lot of it from. But I mean, I used to have a CoStar account. I actually canceled my account a year and a half ago or so. But it cost me like $4,000 a year to keep this, just to do due diligence on a lot of the commercial properties in my market. And for me, I wasn't doing enough with it for it to be worth it. There's other sites like Crexy, where you can pay for Crexy Insights, but even that was, I think that was costing me like 125 or 150 a month as well. Um, and it's it's still not, the data is just not there to the same level it is, even though you're paying more money for it. It's still, um, I found, just oftentimes just not as accurate as the home sales data and whatnot. So it's gets much more difficult to verify their assumptions as far as, oh, we're going to raise rents to X amount. Well, maybe we can figure out rental rates, but then that's going to make it be worth Y. Well, okay, that's where you have a real difficulty, right? Because how do I know what that cap rate's supposed to be? It's not something that I can just go look up easily. There are a lot of places that people, look to find cap rates, but one of the things, you can't just find comps easily, and figure that out, especially because there's so much finagling that goes on with cap rates, where NOI, and the way it's built and the way a broker builds it versus the way someone who's actually investing in that property looks at it, or an appraiser. I think that's three different points of view, right? And they're very rarely all the same. So from that perspective, I think it just becomes much harder. Um, I think that's why we haven't seen commercial properties on many of the platforms, and the ones that we have, unfortunately, haven't been great performers, right? Like some of them that have, like, or haven't been great deals for the investors. I think there's some ways around that. The ones that I think really lend themselves to like a fractional investing platform are more stabilized properties, but then you're not getting the great returns, right? Like if you're paying for something that's stabilized, you're it's been de-risked, and so your return level is lower. Um, I don't know. So I think that I'm sure that there's somebody that this is right for. It's definitely not me because, like I said, I mean, if I'm going to invest in syndications, I'm just going to do it directly. I know enough people, that are in the industry, and that I'd feel much more comfortable, putting my money into than just paying a monthly subscription to be part of a group that does it. But if the average check size is the big hurdle for syndicators, but you'd want to be invested with them, I mean, I could see this being worth it, but you just have to make sure that the cost of actually just being in the club, um, doesn't nerf your returns too much. And I think the only way that that works is if you're putting, I mean, I don't know, maybe once you put like 50K to work, then it becomes pretty minimal, right? And so either that's doing like bigger deals, bigger amount in each deal, or really being active on there. I mean, I don't know. I didn't see anything that said exactly how many opportunities they look at each year, um, or how many that they've actually invested in each year. I mean, this is a pretty long list. They've been in business since 2016. I don't know. Maybe they're doing quite a few, and that could work. If anybody watching this is already invested on here, with these guys, I'd love to hear more about it. And that really applies to any of the platforms that I talk about, or even ones that I haven't, right? If you're an experienced investor, you're part of our group now, feel free to jump into the comments on YouTube, jump into our Discord, talk more about it. Let us know what you really think. How has your experience been with the platform? There's already a lot of that going on in the Discord, but there's also a lot of people that still just want to send me DMs, and I'm happy to talk about real estate in really any format. I mean, I don't know, it's been something that I've basically been obsessed with for 20 plus years. I've been all I can think about is real estate investing. It's just a sickness for some of us, well, if you're watching to the end of this video, that's probably you too. Maybe you're early on, and that's it's going to be a fun ride. But so I'm happy to talk to you guys in the DMs, just like I have been a lot of times. But I really want to encourage everybody that does have a little bit more experience to jump in and share more often. Critique what I have to say or give counterpoints. I'm 100% okay with that. I think that the more that we can dig into deals and dig into platforms and just share notes, compare what we've been doing and how it's been working, the better. So yeah, this is one of the first platforms that I think I'm really on the fence about as far as like one, do we even really call this fractional real estate investing? Because I mean, syndications hasn't doesn't really fit that model. Like if I just go out and invest in those, even though I am buying pieces, right? Like just like ticks and REITs have been different ways to invest. And you are getting into specific deals once you join the club. Um, I don't know. It's the extra layer, right? Like I'm in this club, and then this club is in the syndication, and then on top of that, like I just there's a maybe I just need to break down and pay for it and look at deals, but because I just really don't think that I'd actually invest in them, I just don't want to do that. So if anybody's done this, please let me know. And if you haven't and you think I really need to do it just for to share the experience. Oh, I'm really trying to focus on ones that I think that will make the most sense for all of the most people that have joined our community so far. And so I'm just not sure that this is it. But I would really like to hear from somebody who does it, right? So please let me know if you have, or if you know somebody who's done it, right? That's it. Okay, I think I'm done rambling. Really apologize for the very low quality of this video. I think that it is worse than usual. I don't know if you've noticed this has been chopped up a whole bunch. I've had mostly it's just my brain problems, but really it just keeps freezing. And then that's just like my train of thought gets completely derailed. But thanks for watching to this point. Please tickle that like button, or at least just don't hit the dislike button. At this point, I'd be happy enough for you to just not hit the dislike at this point. Um, Anyway, oh, and one more thing I wanted to mention. It seemed like a lot more people than usual watched the Brownfield video I put out yesterday. And so if that's the type of stuff that people are interested in seeing, where it's like, okay, dig into the proposal that we have for this specific property, let me know if there are properties that come up that have proposals out that you'd like to hear my take on, even if I'm not involved in it. I don't mind digging into it, and because especially any of the ones on Lofty, it makes sense because even if I'm not invested in it yet, maybe after digging into it, it's one that I'll buy tokens in, right? And so that it's not a waste of time, and it's not, like I really took a hard look at the Brownfield deal because the token price was down 20%, and maybe it made sense. And it turned out for me it didn't, but it was definitely worth taking the time and going through it. And I think a couple people found it helpful. I was shocked actually at how many hours of watch time there was on that one. It's quite a bit above my norm. So I'm happy to do more stuff like that if that's something that people are interested in. Yeah, just send me, questions about whatever property or proposal when they come up. This is a weird place for me to put that right at the end of a video that people probably clicked away from a long time ago. I'm going to stop complaining about the poor quality of my videos now, and I'm just going to say, until next time, I will keep making mistakes so that you don't have to.